this one. Howdy friends, VeChain, VET, that's right, VET versus USDT on the Binance chart right here. As you can see, the prices are at 18.7 cents, you know, nearly 19 cents for a VeChain token, and that is glorious to see because it actually positions us really in a nice place. We're between we're at the 50% line from the high down to the previous low, right in here at these prices. We're at the 21 EMA on the 4-hour time frame, lovely. We're making our way towards the 50 simple, having retested the 200 simple in the 4-hour time frame, which, you know, only happens occasionally. But when it does and we get a nice response from it, like here, for instance, maybe not so much here, but here, yes, and here, yes, then we can see things continue on the way. So nice to have tested that. That's very good. Now, where would I be looking if we do actually continue on the way down, because we've had this lows here recently, etc. Where would we be looking to? Well, we would be looking down towards 14 cents. Okay, but I'm actually here to tell you that I'm looking up towards 37.5 cents. Do you like the sound of that? If you like the sound of that, then hit the like button. I'd really appreciate you doing so. I would really appreciate that quite a lot, in fact. Okay, so I'll give you a few seconds, in fact, to hit the like button. Here's my music. My name's Rocky Outcrop, Crypto Technical Analysis. Been doing this for a year and a half on YouTube now, and you've maybe just heard about me today, so time to hit that subscribe button and come back for a live stream sometime. Okay, oh, catch you later, K-Doc. Thanks for tuning in, for instance. And you can see people talking to each other. We're all friends here. Come, join the family. Anyway, VeChain, we're looking up towards that target. Can we get there? Because we know there's a lot of noise between where we were last and where we are now. Let's just look at the prices. You know, we've spent a significant period of time beneath this 50 simple moving average here. We haven't really done that throughout this entire period of time since we came in and gave this a proper test the last time we did, you know, a proper test of this thing. So are we going to go in for a proper test? Well, we're still in that risky biscuit zone. Have we got something that's positive for us kind of jumping out at us here with regards to this low? And no, although the stochastics are bullishly divergent. Interesting enough, during a period of oscillation in prices, you know, by and large, by and large, the prices are staying in this kind of general region for the last chunk of time. So, you know, they're oscillating within that sort of zone, or just if you want to have it going sideways, within this sort of zone here. So maybe the stochastics deserves its sort of little bit of extra light there to be shined on it. I wonder, bringing up the ADX, we can see flowing right the way down, flowing down, nice distinct downward angle. We do have a little tick here with regards to the positive and the negative, kind of boiling off a little bit with the last few hours candles, the last 8 hours of negative price action, but we're seeing it sustain itself above that 50% zone. That 50% zone, of course, as well, lining up nicely with the Fibonacci 50% between the high on 16th of April and the low on the 23rd of April, and us finding ourselves above 50% retrace. So that's fantastic to see. Of course, you know, that means as well, if you're to throw in another sort of bit of confluence, that being above this zone is great because it puts us in contention of the Ichimoku cloud. As you can see, just flung on the Ichimoku cloud there now, in contention of it, where we could maybe bust through at its narrowest point. Now, that would take a nice bit of a movement up the way, and it would require us to get a solid boost in terms of percentages, but it is within doable distance. The fact of the matter is, though, that we're below that Ichimoku cloud, and we haven't really been below that, as you can see, since the last time we came in to test off the 200 simple. So that's my current question with this one. The trend is towards the top side. This, if we look up at the 24-hour time frame where we start to get properly positive about this, starts to show us that we've got this amazing hidden bullish divergence on the MACD, and it's very, very, very distinct here compared to its entire sort of history, if you like. You know, the MACD here, they can look back all the way in terms of the MACD histogram, and never ever has it ever been like that in terms of hidden bullish divergence. It's one of these beautiful instances of it where if we could actually get a crack on up the way, we could even maybe take out that 37 target that I've got and go on for even higher targets on beyond, and then it would be like a textbook instance to look back on in the future. What we're going to be looking out for in terms of that, well, a nice tick around here on the stochastics would be nice. They're still pointing towards the downside. Got to be kind of honest with us ourselves here and say that we still have a big danger of going down towards that 14 territory and testing our previous lows. You know, still a big danger of that happening. So that's why I'll be managing my risk. And then to really kind of hammer that point home for us, then what I'm looking at is how I would manage it with regards to our recent targets. So the 1 hour time frame, can we actually push beyond the cloud, get out of this consolidation? This is clear that there's a period of sideways over the last couple of days here for us, while we've had really punishing wicks and movement traversing the range, kind of telling us take profit on your moves when you want to do so. Be sure to manage your risk accordingly, and you know, and well, okay, if you want to take a move, then let's see that you could be looking down towards 18 as your. I'm not financial advisor, no, that's financial advice. 18 is being about your best entry at the minute. We're at 18.7 at the moment. Looking at taking profit around about 21, 22, for instance. Certainly wouldn't be holding on to any trades going down towards 15 if we move past 17 and a half. In terms of really short-term stuff, but that's really, you know, short-term. In terms of the big picture on this one, then what can I say? Because, you know, this is extremely upward movement, and this is on the 2-day time frame. There's no hidden bullish divergence or anything. It's just extremely positive. Now we've had a big pullback, not taking out structure in terms of our DMI, and we're just looking on up and saying, well, all we've done so far is come down and test the 21 EMA. For instance, on the weekly time frame, we're actually still miles away from the 21 EMA. So if we did drop down, then, you know, there could be that we'd know all about it. So we wouldn't want to expose ourselves to that risk. So we're looking to stay above it. And on the 24-hour time frame, we're looking to try and see, can we get the best ever hidden bullish divergence you're going to get and get on up the way. So that's my next target. So managing my risk around about those zones, like I just said to you. Oh, like button really helps. 450 was awesome. Do you guys think DOT will outperform Link? Let's take a look over at DOT. Let's take a look at DOT. Polka dot, poker eyes out. But so what was looking good for it last week when we spoke about it didn't result